So I hear this phrase tossed around pretty often. You get into a car accident and the first thing the person that hits you says is, "Don't worry about it, I have full coverage." Well, on this episode on the Florida Insurance Channel, I'm going to teach you what full coverage actually means and whether it actually really even exists. Welcome to my channel, everyone. My name is Kevin Guerrero. I'm an attorney in South Florida where we specialize in P.I.P., personal injury, and property insurance law. On this episode, I'm going to be teaching you about full coverage and what that means in terms of automobile coverage or automobile insurance policies. Before I get going any further, make sure that you like, subscribe, and comment on this video if you find it helpful. So, you get into a car accident and the person that hits you says, "Don't worry about it, I have full coverage." It's one of the most common things that I've heard down here in South Florida. And a lot of people say, "Yeah, I have full coverage, don't worry about it." And they want to make it seem like, it's some fancy thing. But in this video, you're going to find out that full coverage really doesn't mean anything. What matters is what you actually pay for in your policy. So sometimes, if you're getting one of these less expensive policies, you might be missing out on a lot of important coverage and you might be putting your assets on the line. So, without further ado, what is full coverage and does it really exist? When you get a car in the state of Florida, you have a duty to get some insurance for it. You can go to any one of the major insurance providers, you can go to an insurance agent and they can find one for you. But no matter what the circumstance is, no matter where you are financially in this life, you have a duty to get an insurance policy for your car. Now, in the state of Florida, people say, it's a no-fault state. That's a common misconception. I'll let you know as an attorney that practices in personal injury and car accident cases all the time, that Florida definitely counts who is at fault in an accident. I'm suing people all the time for negligently driving and injuring my clients. So if you're at fault, you will be sued. So that's a little bonus tip in this video. In Florida, the whole no-fault state thing, it only pertains to one part. And that one part is called P.I.P. or personal injury protection. That's the minimum coverage that you need to have in your car. I'm not gonna go too deep into what P.I.P. is and who it pays. Just know that it's the minimum, and in bare bones explanation, it's basically $10,000 that can be used for you, people in your car with some caveats, or other individuals to pay for medical payments when you're involved in a car accident. So what that means is that regardless of whoever's fault it is for the accident, P.I.P. will step in and be the primary insurance payer for medical bills after an accident. If you go to a chiropractor, which I highly suggest that you do after a car accident within 14 days, because that's a requirement under the law, you have P.I.P. to cover up to $10,000 with some caveats. So the first part in your insurance policy will be P.I.P. Now, if you have P.I.P., does that mean you have full coverage? No, it doesn't. Another part of your policy that you can have is called property coverage. Now, property insurance covers your own vehicle and it also covers other property. So it could be other vehicle. If you hit a tree, could be money to repair that tree or get a new one in its place. If you hit somebody's house, it could mean money to fix that person's house. So you have to be mindful of how much property insurance you carry under your own policy. Most of the time when it comes to property, people think, as long as if I get into a car accident, my insurance company will pay for all the property damage. That's not necessarily true. There's different levels of coverage that you can get. So let's say, for example, you get into a 3-car pileup and you happen to hit a very expensive Mercedes or a Ferrari or something, and you're at fault. Well, chances are you probably don't have enough property insurance coverage to pay for a Ferrari to be fixed. You know, most people get, you know, a low property coverage, you know, maybe $50,000 or something like that. Will it help in covering for property damage that you cause? Yes, it will. But, you know, in cases of, like I said, worst case scenario, you hit a Ferrari, it's going to probably cost a lot more than $50,000 depending on how bad the accident is. And if you don't have enough coverage in your policy to cover you for that, whatever is excess of that $50,000 is going to be your responsibility to pay for it. So keep that in mind. The next part of an insurance policy is called bodily injury, or BI. So this is that part where if somebody gets into a car accident and they're injured, they try to see what kind of BI insurance the other person has, the person who's at fault or negligent. So again, this is something like the property insurance that comes in levels. You can get as small as a $10,000 policy per person per accident, and combined $20,000 limit, or you can get, you know, 25, 50. You can get, you know, 100, 300. It really depends on you, what you feel comfortable with, and I'll get to it a little bit later why maybe you want to get some more coverage for yourself. But just know that if you have PIP, which is the minimum, then you have property, which is for property damage, then you have BI for liability. This covers you, your own assets, and pays for somebody else's injuries if you are negligent for the accident, if you are at fault. So depending on how much you have in your policy, that's how much money is available to protect you personally and your assets if you are found negligent for an accident and you cause somebody else injuries. So as you know, injuries can kind of pile up. Simple surgery can cost, you know, over 6 figures. So you want to make sure that you have enough coverage to protect your assets. Now, I'm going to get to it a little bit later on. You know, not everybody needs a lot of coverage on their policy, but, you know, I'll explain to you in a little bit why maybe you want to get a little more. The next part in your insurance, which is, it's an optional thing to get. So it's called UM, or underinsured or uninsured motorist coverage. UM is basically like BI, except that it's used for yourself, even though somebody else is negligent, okay? So let me give you an example. If person A is at fault for an accident and collides with the car of person B. Person B is not at fault. Person B is injured in their body, right? They have bodily injury. And then person A either, 1, doesn't have insurance, or 2, doesn't have enough insurance to cover for person B's physical injuries. That's a situation where UM will kick in and substitute for the BI policy limits on person A to cover for person B's bodily injury, okay? So let's say person A doesn't have any insurance. That happens in South Florida, unfortunately, a lot of time. That's also why I highly recommend that you and everybody you know carries UM coverage in their policy, okay? So person A doesn't have insurance, and person B suffers, you know, $50,000 worth, let's say, of medical bills and pain and suffering. Let's just say it's $50,000, you know. So in this scenario, person A has no insurance. They can't pay those $50,000. Chances are, if person A has no insurance, they probably have no assets. Assets can include properties. Assets can include cash in the bank, stocks. You know, there's a lot of different assets that people can have, but chances are, if you're driving around and you don't have any insurance, and you probably don't have too many assets. So it's a situation where person B is able to use their UM portion of their policy. So if person B has a $100,000 UM policy per person, they can use $50,000 from that $100,000 to pay for their medical expenses. If, however, person B had no UM coverage and person A has no insurance, person B has to find another way to pay for those $50,000. Okay, they might use their own health insurance or whatever it is, but it's not going to pay for something that's very important, which is called pain and suffering. That's when you suffer a permanent injury. So if you don't have UM, you got to find another way to pay for those $50,000 if the person at fault doesn't have insurance. Now, scenario number 2 is the same thing, except person A has some insurance. Let's say they have a small policy like $10,000, $20,000, okay? You still have, or person B still has the $50,000 in medical bills to pay. In this case, person A's insurance will pay the $10,000. Now person B has $40,000 in medical bills. This is a situation where now the UM policy for person B kicks in and pays the additional $40,000 plus any pain and suffering if there is any. That's why I highly recommend it. Your insurance is always going to ask you if you want to have UM or not. If they don't ask you and you don't waive it or reject it, it's going to be equal to whatever your bodily injury limits are. Okay, so keep that in mind. Now there's one last type of coverage that not many people have, but it's extremely important for some people to have. It's called a personal liability umbrella protection policy, or P.L.U.P or umbrella. You can call it whatever you want. Your insurance carrier will provide it to you. I've never seen a P.L.U.P for less than $1 million. This is, for some people who feel like they need a little bit of extra coverage in case they're found negligent for an accident. Now I'm going to move on to the next point, and I'm going to explain to you why maybe you're somebody that wants to get a little bit of extra coverage in your automobile insurance policy. The whole purpose behind insurance is because if you're found liable, meaning you're negligent, meaning you caused the accident, and somebody else is severely injured, okay, they're entitled to be compensated by you. Okay, let's start off there. Whatever the amount may be, if it's $1 million that you caused in injuries, you owe $1 million to that person. The reason you get insurance is because you have money to pay for at least some of that injury. And a lot of time your insurance companies are going to try very hard to fight for you to settle the case for your liability, for your negligence within the limits of your policy. Okay? Let's say you're somebody who has a lot of assets. You have a business, you make a lot of money, you have assets, maybe you have multiple cars, maybe you have multiple houses. Well, guess what? You're somebody who I highly recommend gets a big policy or a P.L.U.P or more, because P.L.U.Ps can go up, several $1 million. And why is that? Because if you get a small policy, let's say you are somebody that has a lot of assets and you get a small policy, a 10-20, but you cause $1 million worth in injuries to somebody else. Your insurance company is going to pay the $10,000. They're going to fork it over easily, and they're going to be out of it, out of the equation. Who's going to be left responsible for the $990,000 in injuries? It's going to be you, okay? You can do easy asset searches and find out relatively quickly what assets somebody can have, and a good attorney will do that if they feel like it's necessary. And they're gonna find out that you have money. So they're gonna, the person that you caused injury to, they're gonna take that $10,000 and then they're gonna go after you, they're gonna go after your house, they're gonna go after your business, however they can get money from you to pay for the remainder. And you know what? I hate to say it, but you deserve it, because you got a small policy knowing that you have a lot of assets, so you're very exposed if you are found liable. You're somebody that should get a big policy. Is that the scenario for everybody? No, it's not. So don't be worried and think that, oh, I'm not covered, I should get more coverage and go spend a lot of money on a big policy, because the fact of the matter is, Not everybody's gonna need it. If you have sufficient coverage, more likely than not, your insurance company will be able to settle any claim within that amount. Just keep that in mind. If you have the potential of being exposed to excess liability above your insurance, and you have assets to pay for excess liability above your insurance, you're gonna wanna get more coverage and increase it, or increase your coverage, because you wanna protect your assets. At the end of the day, let the insurance company pay. That's what they're there for. That's what you pay them every month for. So let them pay, not you. So, what have you learned in this video? Hopefully what you learned is that there really is no such thing as full coverage, because it really just depends on what you have in your policy. You might not be able to pay for everything and keep your assets safe if you don't have a big enough policy. So I hope that you take a look at it today. You can send me an email, which is in the description below, and I'll be more than happy to explain it. I'll be more than happy to review the policy for you. But just be aware, if anybody ever comes up to you and says, yeah, I have full coverage, don't worry about it. It doesn't really exist. I hope this video was interesting and educational. Stay safe and God bless.